Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, this market has had quite the rally off of the low, right? I mean, it's come up. Now, maybe we get as high as that 200-day, but I don't think we're going to get through it on the first try. A lot of times you come up and you touch the 200-day, you get a pullback, and then you make another attempt, and that attempt gets through, right? But usually on the first try after we've already had this big rally up from the bottom, right? So we're coming up, we're going to touch the 200-day, probably pull back, and then they're going to push it up to a new record high. They're pushing us up to a new record high now. You can tell that they're trying to inject the liquidity into the market. Just look at the junk bonds. Junk bond symbol HYG. They're almost at a record high, right? I mean, they're haven't come down. They came down a little bit, but they got them above all the moving averages, and they're pushing them up higher, right? Nobody buys the junk bonds if this was the big crash. This is not the big crash. They're going to push it up one more time. Now, I know that makes absolutely no sense, right? I mean, think about the economy. We just got the GDP number, right? Down 0.3, right? They were expecting a positive 0.4, but it dropped 0.3. It's telling them that they're already, the start of the recession is already here. Now, they'll figure it out a little bit later, but me and you were ahead of the curve. We already know we're in a recession, and this could probably lead to something much, much worse. And we're going to talk about why that is. You see, the Federal Reserve, now they're losing control, right? They're losing control of the interest rates. They're cutting that lower end, shorter end of the curve, but the longer end of the curve, the rates are going up. And like I say, the longer end that pertains to your mortgage, I think your mortgage is going to get up above 10%. That's around 7% right now. But every time they cut that short end, the longer end of the curve goes higher. And that's going to push your mortgage rates up, going to push your car payments up. When you go buy a new car, it'll have a higher interest rates. It's just going to push it up. You see, they've lost control. They've lost control of the debt market. And the debt market is huge. It's what's going to cause the global bust. Now, the global bust is coming. It's a worldwide problem. Now, I want to talk about why this is the last chance to get out of the stock market when they push it up to a new record high. Eventually, the stock market's going to come down, and we're going to talk a little bit about that. Now, we're in a recession, right? We're in the start of the recession, according to them. They'll revamp their numbers and realize that it started probably back in January, maybe even late last year it started, but they'll figure it out. They get a little bit of their data comes in a little bit late, and they figure things out because they're not really quite that smart at the Federal Reserve as me and you. We know we're in a recession, right? But okay, what happens in a recession? Well, you get the job losses, right? You get job losses. Now, UPS, they came out and they announced they're laying 20,000 people off. That's just one company. 20,000 people are getting laid off. Okay, one company. Now, where I live in Silicon Valley, and Silicon Valley, they're laying them off everywhere, right? Every major tech company is laying people off. Really hard to find a job right now if you work in technology. But you see, here's the thing. Here's why this is going to cause the stock market to come down. People are getting laid off, right? So they're not getting a paycheck. Now, out of everybody's paycheck, what happens? The higher end jobs, right? The UPS type of job, out of your paycheck, what do they deduct? Well, your retirement, it funnels into the 401k plans automatically. Every month it funnels into the 401k plans. Now, when it funnels into the 401k plans, what do they buy? They buy the S&P. Now, what's the S&P made up of? Basically, the top 7 companies, the Magnificent Seven. So the money is automatically funneled into these companies each and every month, which has been pushing the stock market higher and higher. But when you got the job losses, they don't get the paycheck. They don't get to take the money out for the 401k. They don't get to funnel that money into the stock market. So the stock market no longer continues to press higher and higher and higher like it's been doing for the last 16 years. You're going to get the left. We haven't had a recession in 16 years. Why? Why is that? Because the government keeps printing money. Every time it looks like a recession is going to come, they print $2, $3, $4 trillion, pump it in because they can't have a recession. See, a recession means that prices are going to come down. Prices of the stock market will come down. Prices of your house will come down. That's what happens in a recession. People lose their jobs. They don't funnel the money into the stock market due to the 401ks. They lose their job. They can't make their mortgage payment. Those houses go on to the marketplace and inventory increases and prices start to drop. That's how the recessions work, right? So we're taking away that funnel. We're taking away that funnel because of all the layoffs that are coming. Look, the other reason the layoffs are coming is because of the tariffs, right? The tariffs. Okay, so we got this big trade war going with China. We're tariffing them 140%. They're tariffing back 125%. We got this trade war. Well, you see, China makes the stuff, right? So it's not being shipped over here. Now, I've heard reports that as much as 60% of truckloads, okay, so they load up the trucks and the trucks ship it across the nation, right? Well, 60% of those loads are not being loaded up because they've stopped bringing the products in because of the tariffs. 140% tariff on China goods, so China no longer can get their products in here, so there's nothing to ship because we really don't make that much. I get it, we make some things, but we really don't make that much. That's why 60% of the trucks are not coming across the country. Good news is traffic's going to be down on that interstate I-80 or whatever it is that goes all across the country, right? Traffic's going to be down because the trucks aren't going to be out there moving the stuff. Now, here's the problem. The stuff doesn't get to the stores. The shelves are empty. They start to lay off people. More layoffs, more layoffs, more layoffs. The truckers are laid off, right? There's no jobs. Nothing to move, nothing to stock in the stores, nothing to sell. A lot of layoffs coming. Once again, the 401k plan that's attached to, the people's checks, right? They deduct that, funnel it into the marketplace, not going to be funneled in anymore. So the stock market is not going to stay at these lofty levels. It's going to come back down. Now, here's the thing also. On the trade wars, let's talk about the trade wars a little bit, right? So right now, there's no trade between us and China. Very little. Much reduced, right? 140% us, 125% them. Really, we're only moving the essential stuff back and forth, and those prices are going to be going up. Basically 100%, right? As to what you were paying before the tariffs are going to be going up to 100%. And the Trump administration is very upset that Amazon, they're going to post on their things how much extra you're paying for the tariffs. They think that's a political move by Amazon's part. Well, Amazon just doesn't want to be screamed at as the greedy Amazon, right? They want to show you where your money's going. It's not going to Amazon. It's going to the tariffs, right? Okay. So, but anyways, the trade is not going through, right? So what used to happen, China would ship the products over here, right? And we'd ship our dollars over there. They don't want our dollars. What do they do with the dollars? Well, they funnel them into the stock market. They funnel them into the bond market. They buy our treasury bonds, right? Because they got all these dollars and they don't know what to do with it. Look, stock market's owned about 25% by foreigners, right? Because they funnel their dollars into our market. Well, if you stop the trade war, that funnel gets shut off also, right? What happens to the bond market? Well, they're not going to be buying our bonds anymore. They're not going to be buying them. They're actually probably going to be selling them. A lot of people say China's selling our bonds. And you look at the bond market, like the TLT, I mean, that's getting moved 1%, 2% a day. And that's really not that normal, right? Bonds are usually pretty steady. But right now, they're moving all over the place. A lot of volatility in the bond market. Very dangerous time. This is dangerous, right? Because nobody else is going to buy our bonds, right? Who's going to buy them? Well, the Federal Reserve. They're going to monetize the debt that way. And it's very sad. It's very sad. You see, what is debt really? Debt is just pulling future spending into the present, right? So we're selling off, the younger generation, we're selling off their future, right? We're stealing from their future so that we can live a higher lifestyle. Now, the debt's not just the sovereign debt. It's not just the government debt. Government's in debt a lot of money, right? Well, we 37 trillion, 120 trillion unfunded. Let's just call it 150 trillion that we pulled forward from the younger generations. Thank you, younger generations. Keep out there, keep working, paying into that Social Security. Us older people, we love to get that Social Security, right? We love to get our Medicare. You keep paying in because it ain't going to be there for you. I'm telling you that right now. But it's going to be there for us because you're out there working. We like that, right? So, but what that does, it pulls that future into the present. So we're stealing your future, making it into the present. Now, in order to keep the system going, you have to keep increasing the money supply. Increasing the money supply, how do we do that? We print extra dollars, right? We debase the currency, if you will. You see, the currency's already lost 99%. 99% just since the Federal Reserve started when a dollar was worth a dollar. Now the dollar's the new penny, right? Okay, so we've lost 99% of our purchasing power. We have that 1% left. But here's the thing. It's starting to accelerate. That 1% is going to be wiped out in a heartbeat, can be wiped out overnight. As soon as everybody loses confidence in the dollar goes away, that 1% gets wiped out. Now, you might consider getting some real money, getting some gold, getting some silver. I don't care if you do or not, but I'm suggesting that's what I'm doing because I see the writing on the wall. And right now, you are having a little bit of pullback in the gold, a little bit of pullback in the silver, a little bit of pullback in the real money. They're going on sale right now because believe me, they're going to go a lot higher because this last 1% of the dollar, they're going to accelerate as to how quickly they can steal it from us. And yes, they're stealing it from us by debasing the currency. But they got to keep the debt system going, right? I mean, the debt system is what we have right now, and it's very dangerous. See, debt destroys the nation, right? It destroys the currency first. So when the nation loses its currency, it destroys the nation itself, right? I mean, maybe we go into a hyperinflation event, right? Maybe we have a deflationary event first with the stock market coming down and the real estate market coming down and the bonds crashing because these funnels are shut off, right? We no longer funneling the money in. The money is not being funneled in, so these are going to come down. So maybe we get that deflationary event first, but I got news for you. What will the Federal Reserve do? They'll start the printing press as fast as they can. They will hyperinflate as much as they can, as quickly as they can, because we have to default some way. The pain is going to come. See, a lot of people don't understand that. They think there's going to be no pain. They think that we've avoided a recession. First of all, we haven't avoided a recession, and this recession may result in something much, much worse. But we haven't avoided it. The pain is on the way. There's going to be a lot of pain. A lot of pain. In the U.S., we're not really used to that pain. Now, you look at the trade war. Now, who's used to more pain? The United States or China? I think China can handle pain better than the United States. We've become this weak nation. We don't like pain. We can't handle it. We beg for help. Look, we're going to be begging for the government to bring in a CBDC when the dollar goes away, a central bank digital currency. We're going to be begging them, please save us, Mr. Fed Chairman Powell, please save us, please give us a CBDC so you can control how we spend our money. We can't think for ourselves how to spend our money. You have to control us, Mr. Fed Chairman. You have to get the CBDC coming in to replace the dollar because the dollar is going to go away. I say it's already gone. We've already lost the dollar, but but right now it still has 1% of its purchasing power. They're going to take that away. Once the confidence is lost, that all goes away. So this is how we're playing out right now. We're playing out that the market is going to continue higher right now, push it up to a new record high. Going to be your last chance to get out, because in about a month, maybe 2 months, they can push it down the road. These funnels are going to be shutting off. These funnels are what funnels the liquidity into the stock market, funnels the liquidity into the bond market. Not going to be coming in. They're going to be shut off. The bond market's coming down. The stock market's coming down. Real estate market's coming down. It's all coming down. But they will fire up the printing press. Hyperinflation will be the next move. Get some real money when it's on sale here. Maybe we get below 3,000 in the gold market. Maybe even silver can get back below $30. If it does, that is the gift. You want to take a chance on this opportunity. It is an opportunity because common sense will tell you what's coming down the road. It's going to be a lot of pain. Anyways, I hope you like this stuff. Give me a thumbs up. Get out there, everybody. Enjoy the day. We'll talk again real soon. Bye-bye now.